Good morning. Hi, everyone. Thanks for joining us today from a very dark, wet, and quite gloomy Bristol. I hope it's a little brighter wherever you are. So today's webinar, we're going to talk through some of the specific insurance use cases for our new global data. It's probably important for me to say at the start that this is not a deep dive into the data itself. If you're interested in how we built these data, I would urge you to go back and look at our previous webinars. We have two, actually, one of them looking into the hazard modeling itself, and another looking into the climate dynamics framework, which we'll talk about a little bit today. Next slide, please. So I'm joined today by my colleagues, Matt Jones and Harry Vardigans. By way of introduction, my name is Andy Smith. I'm one of the founders here at Fathom. I'm going to talk through a little introduction to the data themselves, a little bit of a history, I guess, into how we ended up coming to the point where we're at today with global data sets. And then I'll hand over to Matt Jones and Harry to really talk through the bulk of the presentation today, which is to talk through the use cases themselves and how these new data can be applied within the insurance industry. Next slide, please. So by way of introduction, if you're not aware of who Fathom are, we were formed out of the University of Bristol in the UK. So the University of Bristol is one of the leading research groups in the world building these things that we call computational flood models. And we were formed by a team of scientists out of that research group. And our aim in the beginning was to build models of the whole planet. And that is indeed still at the heart of what we do here. We're trying to build flood models, true dynamic flood models of the whole planet. And one of the important things that I'll emphasize a few times is that research plays a really important part of what we do here at Fathom. We are really operating at the forefront between academia and what's available to end users. And we publish all of the things that we produce in the world's best academic journals all the time. And I'll emphasize a few of those papers in a moment. Next slide, please. So why Fathom? Well, I've mentioned there that we publish everything that we do in peer-reviewed journals. I think integrity and openness is a real key part of what we do here. We publish all of our work in academic journals and expose that to peer review. We are, I would argue, a cutting edge organization in that we operate with academia. We work with the world's leading research groups around the world. And that gives us access to data sets and also partnerships that perhaps otherwise we wouldn't have access to. A nice example of this is a recent data set that we released called Fathom, which is a global terrain data set that we produced in collaboration with researchers at the University of Bristol. One of the other unique things we have here is our new climate dynamics framework. And if you want more detail around this, again, I would urge you to go back and look at our previous webinar where we talk in detail around how we built this. But this is a framework that essentially enables you to sample and identify future risk for any flood peril anywhere in the world for any scenario that you want. And that's both for inland and coastal flooding. I would also argue that accessibility is a very important part of what we do here at Fathom. We're trying to make these complex and often large and difficult to use data sets much easier to access. And one of those things is via our API, which Matt will talk through later on. Next slide, please. So I mentioned at the beginning that we do publish everything that we do here at Fathom in leading peer-reviewed journals. And this is a little example of the timeline of how we got to the point of building global flood models. This actually goes all the way back to the early 1990s when our chairman, Paul Bates, published some of the first grid-based two-dimensional flood models. And what you can see here is a timeline outlining the progression of these models through the last few decades. Next slide, please. Now, when we're talking about building flood models at global scales, I just want to emphasize how difficult a task this is to do, because these kinds of models have really only existed for the past few years. I would actually argue that this industry of flood modeling, and particularly the adoption of these models in the insurance industry, is quite unique in that the timeline between what's being done academically in research groups and what's being used as a product by end users is incredibly small. We really are using cutting edge models here. The gap between academia and commercial use is almost non-existent. It really is a very quick adoption. Now, these models are very juvenile. We haven't been able to build models at global scales for very long at all. We actually built the first version of a high resolution dynamic global flood model only 6 or 7 years ago. And the reason that these models haven't been built before is down to, well, many things, but principally scale. With flooding, you're talking about a spatially very complex peril that requires traditionally lots and lots of local information. So if I was to try and summarize the problem very quickly, I would say that trying to bridge the gap between local scale perils and local scale models at global scales is really the thing that precluded us being able to build these models. Next slide, please. And this is, I think, the list of major challenges that we had to overcome in order to build these models anywhere in the world. We have things like terrain data sets. We've been hampered by very poor global terrain data sets. How do you identify where river channels are and how big they are? We need to represent them in models to get good representations of floodplain dynamics. How do we define how much water to plug into rivers and how much rainfall to plug into model domains? And how coastal water levels around the world, how do we define what those look like for very extreme events where we don't have many observations? We also need to represent defenses. And the last 2 points are, I guess, to some perhaps somewhat boring, but really speak to the heart of the problem here. And that is automation and efficiency. We need to build these models in automated ways, and they have to be really, really efficient. Next slide, please. And these are some of the key advances that we've made in the latest iteration of our global model. The big one, which I've chosen to identify in a little more detail, is the terrain data sets. So I'll speak in a moment about some of the advances we've made in terrain data sets globally. We have a new terrain data set called Fathom. It's also been interwoven with laser altimetry data around the world. Our new global data also include coastal information. Previously, our global data only had inland information. We have our climate dynamics framework, which I mentioned at the beginning. This allows us to give you an answer for any climate scenario that you want, anytime up to 2100. We also have some novel modeling techniques that we published in the last year. And that is a dynamic channel solver, so a new way to represent river channels, and also new ways to implement machine learning to try and get better estimates of boundary conditions for our models. We validate our models extensively, and we've done more validation of our models since the previous release. And we also have new products coming out, so new derivatives of the models themselves in the form of risk scores, which Matt, again, will talk to. Next slide, please. So this slide indicates the advances that have been made since our last global model with regards to global terrain data sets. And what we have here is a simulation of a flood. This is in Australia, in a place called Rockhampton. And on the left, we have a simulation run over our previous global terrain data set. And on the right, we have what I would call truth here. And that is a data set called LiDAR, which is laser altimetry. It's incredibly precise and accurate. So it's the best representation of terrain that we can get. And what you can see here is that we have a much closer match with our new global terrain data set called Fathom. Now, Fathom itself is a reprocessing of a European Space Agency data set called Copernicus DEM. And we've employed principally a suite of machine learning methods to try and clean that data set up to make it usable in flood modeling. And we published this last year in ERL. If you'd like more details, you can read the paper. I would also urge you again to go back and watch the previous webinar. Next slide, please. But it's not just Fathom. So Fathom is the base layer. It's the kind of worst case scenario in our global model. In the most data poor areas, we use Fathom, this derivative of Copernicus DEM. But actually what you can see here is where we've stitched in local terrain data sets where they exist. We've expended a lot of effort in the last 2 years trying to collect as much available local terrain data sets as we can. And what you can see here is that for much of populated Australia, Japan, most of Europe, Western Europe, and most of the populated US, we have local terrain data sets now interwoven into our global model. Next set, please. So now I thought I'd just show you what these data actually look like and outline some of the progressions that we've made building these models in the last 7 years. Now, this is an area of Zimbabwe, and it's an area that was interesting because there's actually a hospital right about in the middle of your screen. And this is the first version of our global models. So this is what we released back in 2015. And what you can see here is that some of the major channels are reasonably well represented. They're captured reasonably well in global terrain data sets at the time. But you can see that there's a kind of a patchy, blocky, seemingly inconsistent channels for the small channels surrounding the main river, the river itself. And this just intuitively doesn't really make sense. And this is just down to the terrain data sets at the time struggling to represent these really small flow pathways. And if we look at the next version of our global model, what we can see is that actually some of those smaller channels are much better represented. That connectivity is your intuition with connectivity on floodplains is true. We expect floodplains to be relatively well connected in this way. But what I can also see to my eye is that those channels do also look very smooth. So some of these small channels look quite large for the size of the channels that they are, and they look quite smooth. And this is down to, frankly, the extreme processing that had to be undertaken on the terrain data set itself. If we look now at the latest version of our global data, what we can see is that even the very, very small flow pathways are much better represented in the global terrain data sets. So now we're able to represent, I would argue, very small flow pathways with a good level of accuracy. And this is encouraging because although there's some uncertainty around how flows will change in large rivers out to the future, one of the things that we expect to happen is that localized extreme precipitation in the form of flash flooding will amplify across the majority of the world. So representing these small channels is critical if we're to get a good representation of flood risk, both now and in the future. Next slide, please. I've also chosen this slide to show you, and this shows an airport in Malaysia. And this airport has been hampered by localized flash flooding in recent years. It's a real problem site for the local government. And what you can see here is, again, the progression of the model through time. Now, this in many ways is kind of the worst case scenario in trying to model somewhere around the world. We have a heavily urbanized area. It's actually very flat as well. And in global terrain data sets, those kinds of terrains are the kind of, again, the worst case scenario. But what you can see here is that we're getting now a much better representation of even some of the small flow pathways around the airport itself. And we're able to represent with much greater fidelity some of the localized flooding occurring at that site. Next slide, please. Lastly, outside of just showing you some images with some increased fidelity of floodplains, I would like to say that we do heavily validate the models that we produce. I think Fathom's models are the most validated flood models in the world. We publish them all the time in peer-reviewed journals, and this will continue. So there's a list of papers on the left-hand side of your screen, which you can find on our website. But we're also now conducting validation of our new global data sets. And I've chosen one example to show you here. And that is an example of a comparison between some remotely sensed flooding in Vietnam and our model on the right. And what we can see is that there's actually an 84% match between the satellite imagery and the hazard layers. Now, given the uncertainties in observing flooding from space, and given the uncertainties, of course, in the models, I would argue that for this specific test case, this is about as good as a result as we could hope to get. So my message here is that we're validating these models, and what we're finding is that they really do have skill, even in the most data poor parts of the world. And with that, I will hand over to Matt and Harry to chat through some of the specific insurance use cases for these new data sets. Matt, over to you.
Thanks very much, Andy. Hi, everyone. I'm going to talk about some of the features of the global flood map data, some of the metrics and the dimensions that we offer. And then between Harry and myself, we'll cover 4 different insurance use cases and talk about the different ways of gaining access to these data. But before I get into that, I wanted to highlight the importance of the progression that Andy showed in some of his slides. A number of the use cases that we go through are focused on underwriting and pricing, which essentially involves the decision to put the insurance company that you work for at risk, which is a significant decision. So clearly you want to be able to use the best available data to make that kind of decision. And as we'll come to, that's especially important for the flood peril. Now, given the progression that Andy showed in his sequence from our global flood map version 1 through to the latest version 3, and the fact that there's already such a large improvement in the quality of the most recent data, I think there really is now a significant opportunity to use these data to make better flood underwriting decisions globally. And of course, that will provide a competitive advantage compared to people who aren't using such up-to-date and cutting-edge data. Okay, so what metrics and dimensions do we offer in the global flood map data? Well, the metrics that you can take from the global flood map are flood depth by frequency, so flood depth by return period, or risk scores. And I'll come and spend a few minutes talking about those in a second. What I'd like to re-emphasize is that this truly is, as you've seen from some of Andy's slides, a global product. If you exclude Antarctica and Greenland, we cover everywhere on the planet on a 1 arc second grid, which is around about 30 meters at the equator, and actually a bit finer than 30 meters as you head towards the poles. And something important to note, and Andy mentioned too, is that we spent quite a lot of work making sure that our flood maps represent a sensible view of climate forcing. And by sensible, I mean, if you're considering the underwriting and pricing use cases that we'll talk through in a minute, our current view of risk isn't just a mishmash of historical information assuming a stationary climate. It's actually on leveling, adjusting sensibly to make sure we have a consistent current level of climate forcing. And actually for some of the regulatory use cases that Harry will talk through in a few minutes' time, we have this very, very flexible framework now, Climate Dynamics, that enables you to answer any questions regulators or rating agencies or senior management in the insurance company might ask about future climate scenarios, future climate options. So that's the overall flood map data. The metrics you can license are flood depth by return period or risk score. So flood depths are typically what you'd think of if you think of flood maps. I think most people on this webinar will understand what a flood depth map for different return periods are. And we have 8 return periods as standard within our global flood map product, ranging from 5 years up to 1,000 years for the extreme cases. And various sub-perils or types of maps available from us. So fluvial, which is river flooding, pluvial, which is surface water or flash flooding, and coastal, which is the flooding from the combination of high tides with storm surges and wave action. And fluvial and coastal perils are available in both defended and undefended maps. And the use there is if you want to look at a particular frequency of flooding for whatever reason, it might be some sort of legislative reason or local regulations that mean that you need to look at a particular frequency of flooding, then of course understanding how the depth of flooding varies at a particular return period is really useful. And if you want to compare a flood map to local defences or site-specific defences that are geared around a particular standard of protection, then again, knowing that information, that flood depth at different frequencies at different return periods is really useful. And that, I think, is what most people will think of when they think about flood maps. So risk scores, we think, can be a very powerful metric, especially for some of the use cases we'll consider on this webinar. And risk scores are new to Fathom products. And what we try to do with risk scores is to combine as much information as we possibly can in every grid cell relating to flood, to come up with a well thought out and a consistent measure of how that underlying hazard and therefore the underlying flood risk varies as you move from grid cell to grid cell. And we have 2 different flavors of risk score. We have relative risk and risk category. So relative risk, how we calculate that is we work out what the average annual loss is for an arbitrary property for a uniform exposure, 1 million of TIV, of total insurable value. And we calculate that average annual loss using information across the whole frequency spectrum, so using all the return period maps we have available, making an adjustment from depth to damage using something called a vulnerability curve, which takes you from depth to damage for that arbitrary property, and weighting between undefended and defended views in a sensible way. So a lot of information going into that relative risk calculation, that average annual loss calculation. And then what we do is repeat that for every single grid cell, for every single 30-meter grid cell on the planet, we repeat that calculation. And that we don't vary the exposure as you move from grid cell to grid cell. We don't vary the TIV. All that's varying as you move from grid cell to grid cell is the underlying difference in hazard, but a huge amount of information packed into that quite powerful metric, I think. Risk category is related to relative risk. So for relative risk, you get a score that's anywhere between 0 and the theoretical maximum of 1 million, never gets to 1 million. Risk category is a more discrete set of numbers. For some use cases, this can be useful, as we'll come on to. And what we're doing there is categorizing relative risk into a risk category score of between 6 and 100. And for the scores 1 to 5, we look outside our extreme flood. We look outside the 1,000-year flood, and we look for risks for locations that are proximate, both in a horizontal and a vertical sense, to our extreme flood surface, and use that information to categorize into 1 to 5. So you then have a score between 1 and 100. that enables you to see how the risk is varying from one grid cell to another. And you can see the types there a little bit different to the types for the flood maps because we've already weighted between defended and undefended views. So you have fluvial or coastal options for relative risk and risk category. And also if you want to look across sub-perils, so you want the combined risk or relative risk across inland, so that's fluvial and pluvial, or across all the perils, fluvial, pluvial and coastal, we have relative risk and risk category scores for all of those combinations. And we'll come on to use cases. That's the purpose of this webinar in a few minutes time. But I think these metrics, because they pack a lot of information into them, can be really useful for systematic underwriting and pricing of flood risk. Because I think they're useful, I think it's worth just going over and making sure people are clear on the relationship between relative risk and risk category. And hopefully this graph shows that. So if you look on the x-axis of this graph, you can see risk category between 0 and 100 there. And if you look at the green lines at the top part of this graph, you can see annual average loss plotted. So that's relative risk, again, for a uniform exposure and a TIV of 1 million. And you can see the relationship there between the relative risk in green on the y-axis and the risk category. So mapping relative risk through to risk categories 6 through 100. In the orange there, you can see what we've done with the lower categories, the 1 to 5 categories. We've looked at locations outside our extreme flood, so outside our 1,000-year flood, but proximate to it in a horizontal sense and also in a vertical sense. You see the vertical heights here, the heights of locations proximate to the extreme flood, above the extreme flood surface. And we use that information to categorize it into the 1 to 5. And the reason for doing that is we think our maps are very good and state of the art, but of course there's always uncertainty in any modeling. So we think it's useful to give people information about locations close to our extreme flood. We think that extra information will be helpful. So on to the use cases. These are the 4 use cases we will run through. So I'll talk about the personal lines and commercial lines underwriting and pricing use cases. Harry will talk about large site underwriting, pricing and regulatory use cases. Now, for the underwriting and pricing use cases, I thought it was worth putting some generic comments down that apply to all of the underwriting and pricing use cases. And I've had some experience in my career of pricing all perils for personal lines business in the UK, and indeed managing the catastrophe risk for a large multinational insurance organisation. And I would say from my experience that flood is the most challenging of natural perils to underwrite and price, and there's a few reasons for that. And Andy has already covered this first one, in that the spatial variation of risk for flood is on a very, very fine scale. It's on a scale of meters. Anyone that's seen a flood event realizes that if you move a few meters one way, you're wet, and if you move a few meters another way, you're dry. So that spatial variation of risk is very, very fine. The other characteristic of flood is what I call a cat peril. Flood claims often clump together in catastrophic events. Another way of expressing that is that there's a large amount of spatial correlation in the flood claims. And both of those facts really mean that you can't use claims data alone to fully differentiate flood risk. It's just impossible. Even if you're a very big insurance company with a dominant market share, you will not have enough flood claims information to fully differentiate risk and to use that as a basis for pricing and underwriting risk. It's absolutely impossible. Not that claims data are useless. Claims data are very useful. You can see from claims data locations that have been flooded and therefore which may flood in future. But there's not enough information to tell you about what might happen in the future in areas that haven't already been flooded. So you absolutely need external data. It's a prerequisite, I would say, to underwrite and price flood risk properly. And I put down a few bullet points here about some of the ways in which these data can help. Data like our global flood map data can help, and we'll expand on those through the use cases in the next few slides. But essentially, the data can help screen high-risk locations, whether that's referring something for a closer look or applying different financial terms. Data can help pick out the really high-risk locations that might drive the flood risk experience in your account or your portfolio. Our data can be used to define what I would call rating areas. So these are geographical areas of similar levels of flood risk. And by grouping areas dotted around the country or dotted around the world into similar rating areas, that can be a helpful method when applying statistical techniques to try and estimate differentials in flood risk between rating areas. And in fact, our data, the relative risk score we put together, can help with that differential estimation as well. So how does one rating area compare to another in terms of loss cost variations? Relative risk metric can help with that too. For lines of business that have multiple locations within an account or within a portfolio, then deriving account and portfolio specific flood scores can be a powerful technique and a transparent technique. And for large site underwriting, where you have a very significant area, a single site, but a large area, understanding how that risk varies across that site and how that intersects with exposure on the site is really important. And again, our data can help with that. So given the advances that Andy showed, I think that our new global flood map data can provide a competitive advantage. It can enable you to underwrite and price in a much more sophisticated and accurate way compared to people that aren't using data. So those were generic comments about underwriting and pricing. And what I'd like to do now is to go into a bit more detail, starting off with personal lines business, clearly focusing mainly on property business here. And some of the characteristics of personal lines business are typically you'll be wanting to underwrite and price a single location at a time. And the sort of properties, the sort of exposures that are being priced and underwritten are somewhat homogeneous. They're fairly similar. You're talking about underwriting and pricing flats or houses, and sure, the type of house and the type of building can vary to some extent, but by no means can it vary as much as in the commercial lines business. So relatively homogeneous set of exposures. High quality claims data, because of the single location aspects and the good information you have on individual exposures within typical personal line systems. There's good claims data matched to good quality exposure data. And of course, you'll be expected to provide a rapid quote time, a second or sub-second quote time for personal lines pricing. Because of the good quality of exposure and claims data matched together, statistical techniques, statistical modeling techniques have been a large part of deriving pricing models in personal lines business for decades now. Generalized linear models have been used for decades, both in motor and home insurance, certainly in the UK, to derive fairly sophisticated pricing models. So, and of course, claims data is the main source of information for most perils when producing these models. But as I've already said, for flood, claims data alone are really insufficient. You need external data to represent flood risk properly. And so what I would do here is use our risk category to define the rating areas that are typically inputs to these sort of statistical models. And then use relative risk to help look at the relativities between the rating areas that will come out of the statistical models. Sure, claims experience will give you a sense of the relativities too, but actually my experience of this is if you look at relativities by year in your statistical model, they vary a lot for flood because it's a relatively low frequency peril, and the relativities can vary a lot according to the events you have in each year. So actually using something like our relative risk score to help define the relativities and implement those relatives, I think can be pretty useful when it comes to personal lines pricing. Now, of course, our data can also be used to drive referrals or declinatures, risks you might not want to take on or might want to impose terms. And there you can look at return period specific maps. There might be good reasons within your country, within your legislation, why actually looking at a particular 100-year zone or something might be useful for this sort of purpose. Or indeed, you could look at the higher risk categories, anything above a 90 or a 95 or something, and decide to refer or decline those risks. So that's the personal lines underwriting pricing use case. Moving on to commercial lines. So some of the characteristics of commercial lines business, very often commercial lines business can be comprised of multiple locations within an account or within a policy. And the sort of exposures you're underwriting here, depending on the precise class of business, can be very varied indeed, very heterogeneous. So these can be small retail units or factories or schools or multi-story large commercial office buildings, or indeed a whole portfolio of a multinational corporation's assets around the world. So really varied set of exposure to underwrite and price here. Depending on the legacy systems, the systems that the insurance company has, it can be harder to match claims to individual locations because claims data are always matched to policies, but not necessarily that easily to individual locations in my experience. Claims frequency is typically a bit lower for flood than for personal lines. And you typically have longer to provide a quote, to do the analysis, the underwriting and provide a quote than you would for personal lines. You certainly have more than seconds. You might have hours or days, or in some complicated cases, for very large account, weeks. So a longer quote time than for personal lines. Now, because of the multi-location aspect of commercial lines business, you typically have a number of locations. It might be 10 or 100 or 1,000 locations within an account. What I have found useful when putting in place systems to underwrite and price flood risk is to come up with the concept of an account level flood score. So taking that great location level information our flood maps provide and mapping that onto each location within an account, and then averaging up in some simple way, some sort of relatively simple way to get an account level flood score that's consistently calculated across all the accounts you have in your current portfolio, and of course for future accounts, new business you might come in. And then that account level flood score can be used to differentiate price within your account pricing tool. And the sort of weightings you can use to get from a location level flood scores, is the information we provide, to an account flood score, things like weighting on TIV, location level TIV, and perhaps some weight modification for different types of building for different vulnerabilities. And although vulnerabilities aren't part of our global flood map, we do have a lot of good information about vulnerability we can help you with, because as well as flood maps, we build cat models as well. We've published papers on vulnerability, and we have information that can help you with suitable weighting schemes. And the thing I like about this sort of technique is it's very transparent. You can really map back from an account level flood score to the risks, the locations driving that account level flood score. And even more so than for personal line, screening of locations with the high scores can be a really useful technique here. So you might have 1,000 locations in your commercial account. You haven't got time to look through every one of those locations. So you can pick the locations with the highest scores, the locations that are driving your overall account flood score, and do essentially enhanced due diligence on those locations, check the geocoding is okay, and perhaps carry out risk mitigations or impose risk mitigation actions. And this could be things like requiring site-specific resilience measures, so like local flood defences, to be implemented, or imposing terms, higher deductibles, lower limits, or indeed passing on that risk to a facultative reinsurer, for example. So those are the use cases I wanted to cover. I'll hand over to Harry now, who'll talk about the large site underwriting use case, regulatory use cases, and indeed how you can access that data. Harry.
Thank you, Matt. So yeah, I just want to talk a little bit more about the large sites, and we decided to call it large sites because I suppose it can be used across multiple lines of business and insurance. So anything from onshore energy, construction, transport, facultative reinsurance, as Matt just said. And the main thing about these large sites is as we've said multiple times now, I think they bring many complexities when it comes to underwriting and pricing the sites, and these can often lead to long quotation times. And the main complexity in insuring these large sites is as a result of the actual geographical size, and then considering the spatial complexity that perils such as flood bring with them. Pricing the terms of a policy, and it's quite a difficult thing to do. And that's especially apparent in data poor areas. So other characteristics of these large sites is that they're often industrial or manufacturing facilities, which can be flooded and cause significant losses from business interruption, as well as the physical losses. So next slide, please. So here we have a simulation of a 1 in 200 year fluvial flood, and that's along the Chao Phraya River, using our new global hazard maps. Circled in yellow is the Bang Pang-in industrial estate, which was heavily impacted by the 2011 Thailand floods. I'm sure that's a case that a few people in this webinar have entrenched in their memory. So this was an event which is still one of the costliest floods in for the insurance industry to date. The insurance industry experienced around $15 billion worth of losses, and the economic impact, the economic loss was up at $46 billion. So during this event, around 2/3 of the country was impacted. And this is just a prime example of an event, especially back in 2011, occurring, catching the insurance industry completely off guard. And that's just, I think, a reflection of where the data was at the time and the data sets used at the time. It was a very early science. So within the circled area, the yellow circled area there is that particular industrial estate, the Bang Pang Inn industrial estate, where companies such as Western Digital and Toyota were located. So when these floods occurred in 2011, the manufacturing and the inventories of these warehouses and storage warehouses were heavily affected. So, for example, Western Digital was one of the world's largest suppliers of hard drives. So when they had to halt the manufacturing, supply chains across the world in multiple industries were also impacted by the floods. And as a direct result, created further losses for the industry. So this event was also incidentally one of the events which sparked the idea for Andy and our other co-founder Chris to start Fathom. So with an insight into the impact that these floods had on the insurance industry, for the insurance industry not knowing that they were exposed to flood in this data poor area, and they didn't seemingly unaware of the accumulation of risk that was building up in this highly highly exposed area for such an event. Andy and Chris decided to start Fathom, in part because what they were already building as part of what they're doing at the University of Bristol showed that this area was actually significantly at risk of flood. And now that the science has developed further and Andy's shown you the progression of that, we can really give you a very comprehensive view of global flooding, particularly, as we said, in these data poor areas, but also in data rich areas where we take advantage of the data sets available. So next slide, please, Matt. So looking a little bit more into larger sites, and we've seen this airport in Malaysia before. So this is the Penang International Airport in Malaysia. And if you just click one more on, Matt, please. So again, as I said, we've seen this image, and this is a pluvial map of a 1 in 200 year event happening. And as Andy has said before, this airport has been exposed to flooding, and most recently on the 24th of September last year, 2022, where they had significant flash flooding events happen. So the interest in this site comes with not only the variability and flood risk across the site, but also the variability in the total insured risk across the site. So where is your TIV distributed across this large site? And this map can help underwriters understand the distribution of flood depths and frequencies across the site, and which areas are most exposed compared to the distribution of your insured risk. And ultimately, this can lead to decisions around policy exclusions and certain requirements you put in your policy for the insured to implement. So the lengthy quotation periods on these large sites also enable risk engineers to use our data as part of their surveying prior to visiting a site. This can allow them to then target certain areas, which are the most at risk, and where can they inspect or investigate local defences and the possible failure rate of these defences. And the risk engineers can also use the data post-inspection to recommend possible flood resilience measures, as Matt has referred to as well, to help prevent your insurance company experiencing losses. Another key thing, and I'll go into a little bit more detail later, but you can access these large sites via our API. So if you wanted we do global licenses or in-country licenses, but also we do you'll send in a shapefile to the API, and the API will ping back to you some GeoTIFF files or a CSV file of the site, and you'll get flood depths, risk scores, risk categories as well, depending on what you choose. Next slide, please, Matt. So moving on from large sites, we're going to look at a little bit more into the regulatory reporting and requirements. And so there's really been quite an emphasis on climate change and climate related reporting from international organizations and local regulators. And that has really driven the need for insurance companies to invest in climate condition models. And away from, this is really sort of moving, I guess, slightly away from the traditional areas of insurance and using that maybe historic loss data and current climate maps. So that's, using the maps that we have now available at 2020. And those, mainly the insurance industry is focused on those yearly renewals. So really we're sort of moving out of our comfort areas as we go into this. But I won't go into any sort of specific regulations or reports that that you guys have had to submit to the local regulators in this section, because these can vary quite extensively, and the most common regulations are well known by you all. However, some examples of these kind of regulatory bodies and recent exercises, I guess, would include the Bank of England CBES exercise, the European Insurance and Occupational Pensions Authority, the International Association of Insurance Supervisors, the Securities and Exchange Commission in the US, and the NGFS as well. And all of these organizations are asking different questions and requiring different data sets from you. So this variability in requirements is why we developed the climate dynamics framework. When we, next slide please, Matt. When we approached our customers and prospects and the wider market, we asked, which scenarios, which years did you want? And everyone gave us a different answer. So that left us scratching our heads a little bit. And therefore we decided to create a framework, the climate dynamics framework, which could deliver any scenario, any year, and anywhere in the world. And this is this way our customers are now able to respond to any requirements from a regulatory body. And this framework allows us to add in new scenarios. So say there is a new IPCC report that's brought out, we can add in the recommendations put in those reports. So Matt, if you can just jump to the next slide. So when I say any scenario, any year, anywhere in the world, this is what I mean. So we'll take any year between 2011 to 2100. We can also represent the delta T, so that's warming from pre-industrial times, from 1 degree to 5 degrees. And then these are the climate scenarios we offer. So all of the SSPs, all of the RCPs, as well as the NGFS scenarios as well. And when representing these scenarios and projecting out into the future, that's where uncertainty becomes very apparent. So although as standard we can provide the 50th percentile, so that's the mean, we'll also provide the 17th and the 83rd percentiles. And that really gives you the full range of uncertainty as recommended in the IPCC report. So I think that's the 66 degrees of uncertainty that they recommend. And that's really important, especially the further out from 2020 you go. You need to understand, because the differences can be quite stark. And as we said, we created this framework so you don't have to license multiple different data sets whenever a new regulatory report comes out and you have to respond to it. When licensing the Fathom Climate Dynamics Framework, you can access that data straight away. It's already within your license. So next slide, please, Matt. So how do you actually access this data? And there are, I guess, 3 main ways. The one that we've always had and historically has been hosting it yourselves on premise. So you may have your own internal geospatial data sets, or you may want to build in the GeoTIFF files into your own internal systems. And we can still do that. So we can send that over to you. However, these data sets, especially moving out to these 30-meter wide global data sets, you're looking at multiple terabytes of data, and some people either, some insurance companies either can't handle that amount of data sets, or they, to be honest, just don't want to, and that's fair enough. So We also have two other options. That is via third-party partners, so platforms that we partner with, such as Climate Engine, ImageCat, or Geosite, and they all have our data embedded in them. And any sort of third-party platform we aren't partnered with that you would like to access our data via, please just contact us. We can partner with them. We can put our data on that platform so that there is no restriction there. And then the third and actually most recent way of accessing our data is via our API that we've just built and are rolling out to our clients at the moment. And as we said, this can be accessed by sending in point locations, so lat longs, and getting depths or risk scores back or risk categories back. But you can also send in shape files to the API and get large areas and access to that. We are also working on the ability to be able to submit large portfolios onto these. So because we have just launched the API, that's not yet available, but we are building that functionality out. So you're able to submit huge amounts of data onto the API, and we can bring that back to you within a reasonable time. So next slide, please. I think pass over to Andy to answer any questions.
Great, thanks, Harry. Thanks, Matt. That was really, really great. So we'll quickly spend some time answering questions that you have. We have a shy bunch this morning, so we don't have many questions, but there are a few. First one is for probably Matt. Matt, can you provide a little more detail around the API functionality itself?
Yeah, sure. Thanks, Andy. Yes, so Harry touched on some of this already, but essentially you can submit either a point, so latitude, longitude, or a sequence of points, and specify which layers you want. So do you want depth layers or risk score layers, different types, fluvial, coastal, even down to the level of specifying whether you want undefended or defended layers. And the API will very rapidly give you those back, and it's been designed to fit in with the use cases we've spoken through actually. So that sub-second requirement for personal lines location is the API can return location level information in a sub-second form, and also the large site underwriting use case that Harry spoke about, and he mentioned explicitly on his slides. If you want to look at more than a location at a time, you can indeed provide an area, and there's two ways of doing that. You can provide a shapefile, or you can provide the vertices outlining the site. So there's a sequence of latitude, longitude points that define the vertices around the site you're interested in. And what the API will return there will be a GeoTIFF file, so fairly standard rasterized format that can be used in any GIS application, really. And so you'll be able to see very easily the variation in risk scores or flood depths on that site, which, as Harry explained, is a pretty useful set of functionality. So very quick response time. As Harry mentioned, certainly designing it to be able to accommodate very large portfolios, the sort of portfolios a reinsurer might have. So yeah, that's some of the functionality. For the more technical in mind, you'll have a couple of ways of actually integrating. You can use typical REST API calls, as most people would expect, but also if you prefer to access this using an SDK for the most popular languages, that's a possibility too.
Great, thanks, Matt. We actually have a couple of modeling questions, so I'm quite excited because I can actually answer these ones. So firstly, Anonymous has asked, do you exactly separate between pluvial and fluvial events, as mixed flood types also occur, like the Burn floods in Central Europe? We do exactly separate, and it's a really great question, because one of the problems for us when we're building pluvial and fluvial models is you're right, they kind of, the differentiation between the two is often a gray area. When do you classify something as being pluvial or fluvial? You can end up with, if you're not careful, kind of double counting events, so simulating risk twice. So in previous versions of our model, we actually had a pretty arbitrary, well, an arbitrary threshold between what is a pluvial and fluvial event, and that was simply an accumulating area. So we would take rivers of a certain size, and then we wouldn't simulate fluvial events upstream of a certain area. So when you're below, for example, a 50-kilometer squared threshold, we wouldn't simulate fluvial events, sorry. But that introduces problems because you do end up with quite a lot of double counting. So I think the new way we differentiate between the two, or we try to separate the two, is actually very smart. and that is that we simulate time to concentrations within river channels. So we will simulate how long it takes for water to propagate through a catchment to a point. And we will only simulate fluvial events when the time to concentration is longer than our pluvial events. So for example, if we're running a 6-hour flash flood event, we will only begin simulating fluvial events when the time to concentration exceeds a 6-hour length. So we do try and now kind of separate the two events in a smart way, I think. Okay, another question. I think this one will be for Matt again, and it's somewhat related to API functionality. And that is, I have a question concerning large sites data. Is the location of large site a user input, or do we have a database of large sites that can be accessed?
Yeah, thanks, Andy. Yeah, for the moment, it's a user input. So you'll need to know the site outline and present us with a shapefile or a sequence of latitude, longitudes defining the site. But I mean, absolutely, it's something we can add in is a database of sites that people can then present the site ID or the site reference and provide information on that. But for now, for the MVP, if you like, of the API, it's a user input.
Great, thanks, Matt. We have some more modeling questions coming in, so I'll take these. How are flood defenses implemented in the global flood map, and where do we get all the information from? Well, they're actually implemented in a number of different ways, and representing defenses globally is a huge challenge because, frankly, defense information is hopelessly insufficient. Actually, even in quite data-rich areas like the US, we don't have defense information everywhere. So what we do in our models is we implement defenses where they exist. We can represent them kind of explicitly in the model domains. But outside of that, we have to try and model their presence. So we try and model both where we expect defenses to exist and to what standard we think those defenses defend against. So there is a defense model, in essence, that we implement in the global model. Another question, can the Fathom global maps be used to predict, to trigger satellite taskings? No, not really. We don't really have a forecasting capability that's running online for the whole planet at the moment. An ambition of ours at some point, but that doesn't exist yet. And another modeling question, do we have a time to concentration data set for any global catchment? That's a good question. And the answer is, I think we do, but I'm not entirely sure whether all that information is stored in the model build process. We can produce it if it's something you're interested in. And I think that brings us to the end of the question. So I will wrap up by saying, as I said at the start, you can catch our other webinars. If you're really interested, it sounds like there's a lot of people who are interested in the modeling itself. So if you are indeed interested in how we build these models, then for sure, check out the previous webinars as well. And we're going to be at a bunch of events this year. So I will hope to catch lots of you today on the webinar in person at some point. And you can see a list of events there that we'll be attending. So yeah, I will hope to see you in person at some point. And again, thank you very much for joining us this morning. Thank you.